Hello and welcome to Financial Technology Frontiers Live. And today is a wonderful day, which is the Women's Day, on which we are recording this session. And with me today is a woman leader who is also the CIO and the head of information security at Northern Credit Union. The person whom we are going to talk to is a wonderful leader who started her career as a programmer at RCMP. From there, she got into JP Morgan, a lot of organizations in between, and today she is at the helm of affairs at the leadership position at Northern Credit Union as the CIO. Let us have a wonderful conversation with Mary and understand what are the great implications in the credit union space in the wake of all the recent happenings in the credit union space, and how are we technologically moving ahead. So Mary, welcome to Financial Technology Frontiers.
Thank you so much. It's truly a pleasure to be here today, and I really appreciate the opportunity to have this discussion around digital transformation and its challenges. And I hope these conversations will serve to be important as we, together navigate this ever-evolving landscape.
Wonderful. So, Mary, we have seen a lot of credit unions in Canada, a lot of mergers, acquisitions, and growth taking place in the credit union, a lot of consolidation happening, including in your credit union. Now, when you look at the technology perspective, how are credit unions like you positioned today in this era of digital transformation? And what are the key aspirations of organizations, especially the credit unions, in this space of digital transformation, considering that you have also merged two entities right now?
I think credit unions today are at a critical crossroads in digital transformation. I think some have positively and proactively embraced cloud and AI, but there's many out there still that continue to operate on legacy systems that really hinders the ability to scale and innovate and meet the demands of evolving member expectations. I think it's also important to remember that unlike traditional the larger banks, which typically have larger budgets, credit unions have to really balance modernization with financial prudence. And it's also important to ensure that the digital transformation aligns with member first philosophies. Now, going back to key aspirations, I would say that one of the areas is around definitely cloud enablement and digital infrastructure improvements. I think many credit unions to date continue to operate on on-prem and legacy infrastructures and cores, which really limit the flexibility and innovation capabilities. Moving to the cloud or hybrid cloud architecture allows for that scalability. And while there's also other great benefits around cost effectiveness and enhanced security, I think also when we take a look at the API driven ecosystem, the ability to integrate with fintechs and third parties via APIs is very important, and it's critical for credit unions to be able to remain competitive. Open banking is gaining traction in Canada, and this will soon become a reality and allow our members to securely share financial data while also fostering personalized financial management. And I'd say at Northern, we're very much looking to be able to leverage the full use of our APIs down the road and to expand our services beyond traditional banking. But going back to really bridging the gap and really propelling, credit unions forward, I think there are some other challenges too. There are, the cost constraints that I've mentioned. Sometimes there's vendor lock-ins, and we are highly regulated, so there could be regulatory complexities that get in the way. But I think what's really great with credit unions is that we're uniquely positioned to really get ahead because we're not in direct competition with one another. So instead, we have the opportunity to embrace partnerships and coalitions for collective bargaining power when it comes to technology investments. I think also some other areas of opportunities around leveraging SaaS or cloud-based solutions, like I mentioned. And this could also eliminate the need for costly on-prem infrastructure. And I really think that we should continue our journey on member-centric innovations and digital transformation while making sure it enhances, but doesn't actually replace the trusted relationship which credit unions are built on. And I'd say overall, my focus has really been on ensuring that our innovation aligns with operational excellence and that we continue to look and build a seamless and secure future ready banking solution for our members.
Superb. Now, when you come to, you spoke a lot about the constraints that you have in terms of cost, in terms of, budgets, in terms of also getting access to the latest technologies on one side. On the other side, you have been working alongside the other credit unions as a consortium and all, exploring possibilities of collaboration. So, how have these consortiums been working together? What kind of sharing you do as a consortium so that you can actually leverage the benefit of cooperation?
There's a few actually, and there's more coalitions forming now because for those who are on Forge, which is our digital banking platform, is winding down. So I see more and more consortiums forming and co-op opportunities where, or coalitions forming, where credit unions are really pooling together to get that negotiation power. To be able to secure better banking solutions for our members at really a fraction of the cost. And as we pull together and we build our scale for the active membership, we ultimately end up getting more power around the table to be able to have these discussions around negotiations and get the best for our members.
Interesting. So this is one side from the forming of consortium where you are actually working together and creating great buying power by putting things together. On the other side, you also have to leapfrog into newer technologies. You are having some of the older technologies. So when you are doing this leapfrogging into newer technologies from the existing legacy, what kind of constraints you see and how do you overcome this?
I think credit unions definitely recognize that need for digital transformation. But as you mentioned, with credit unions, there's a unique set of challenges that can really slow down the adoption. And I think it's also important to remember that credit unions, for the most part, don't have deep pockets. So it's really important that we balance innovation with financial prudence and regulatory compliance and member first values. So in terms of key challenges, I think one of the greatest challenges is that many credit unions still operate on decade-old banking systems that are not really designed for modern digital-first banking. We also, for the most part, lack cloud capability and API flexibility and real-time processing. So that makes it very difficult to integrate with fintech's AI and open banking ecosystems. And upgrading or replacing some of our critical systems is a massive undertaking, which requires a significant investment. And, there's the potential for member service disruption. Um, and because credit unions operate for the most part on tight budgets and thin margins, making these large scale IT overhauls can become challenging as well. Also, I think for credit unions, I mean, it's a financial industry that is very much highly regulated. So there's compliance requirements that can get in the way and can slow down the adoption of new technology. And I think as credit unions are becoming more digital, there's also cyber risks that increase exponentially. And there is that potential for phishing and ransomware attacks and data breaches. So it's also important that, we factor in investments in our security tools to be compliant with regulatory frameworks. And one of the challenges we're also having is attracting and retaining top talent, especially in IT. And I don't think it's unique to credit unions, but trying to get talent in IT and cybersecurity and AI and cloud computing is very difficult. And our IT teams are already stretched thin. So and to add to that, I think credit unions also tend to rely on a handful of core vendors, which can create for long-term dependencies and potentially expensive contracts with limited flexibility. And transitioning away from this is it's a complex and expensive undertaking, which can also be high risk. And more importantly, I think member trust is the foundation for credit unions. So any technological changes have to enhance and not disrupt that member experience. And for many credit unions that still, have members that prefer traditional banking, making that shift to digital is a delicate balance. However, I think collectively we can overcome some of these challenges by really adopting smart and strategic approaches to our digital transformation strategies. Like I mentioned, that co op or consortium and coalition models really allow for reduced costs by partnering with other credit unions on shared services. There's also cloud and API driven banking that would allow for future flexibility. And I'd say at Northern, our digital strategy is very much focused on ensuring that we have a scalable model that is also cost effective, but we always prioritize that member focused mindset.
Super. And you spoke about security threats coming along with this digital transformation. And of course, credit unions have the legacy infrastructure. So, what kind of security frameworks are today being implemented in the credit unions like yours in the recent past?
Sure. So I think, I mean, in general, cybersecurity is not just an IT concern, it's a top priority for credit unions. And as I mentioned, as that digital transformation accelerates, credit unions have to really modernize their, core banking, the infrastructure, and to account for the expanding attack surface. And with that, in terms of security frameworks, I'd say we are very much working on a zero trust security model. The traditional perimeter based security just doesn't work. So, in this digital first world, with the zero trust model, every user device and application is continuously monitored and verified before access is granted. And we're working on that journey. We're working on, least privileges and making sure that all of our users and systems have the minimum required permissions. We've got MFA deployed all across, and we're looking at microsegmentation to make sure that our network is isolated into zones to limit the spread of attacks. And we also have continuous monitoring enabled. So that way we can be proactive in terms of threats. And we've got all sorts of controls in place, including conditional access policies and a whole slew of guardrails in place to be able to limit our threat. And I think just overall, I think in terms of emerging threats, like there's quantum computing and AI and ML driven attacks. And when it comes to that, we're very much aware that traditional encryption methods are going to become obsolete down the road, but we're exploring sort of post-quantum cryptography, and I'd say we're in a monitoring stage to ensure we have that long-term strategy in place. But I would say we're very early on in that journey. But what we do know is that, compliance is non-negotiable, and credit unions and our vendors have to align to the highest of standards when it comes to SOC 2 Type 2 and ISO 2701 and being PCI DSS compliant. And our credit union adheres to the NIST cybersecurity framework as well. And we've put together third-party risk oversight and greater controls when it comes to partnering with our vendors to make sure they're also complying to our regulations. And I think in general, investing in quantum safe encryption and quantum risks is really going to be key. And it's given that it's going to become a reality. And for me, I'd say cyber resilience is a journey. It's really not a destination. So I think credit unions that really prioritize it will lead the way in digital trust and innovation really going forward.
Super. Cybersecurity and cyber innovation is a constantly shifting goalpost for that matter, and you have to ready yourself for that. And when you were speaking about in your past conversation, you were speaking about restrictive contracts that the credit unions have been saddled with which they have to really take tough decisions at times, have very expensive solutions to come out of it. So, how do you suggest organizations are now working towards and trying to come out of, or at least getting into more feasible contracts today? How are they leveraging SaaS and cloud services or any of these kind of facilities with their limited budgets to make sure that they are in line with what is required?
For especially the smaller credit unions, adopting a cloud and SaaS solution is really attractive, and it allows for a great way to modernize infrastructure and reduce IT costs. However, without requiring, the heavy capital investment. However, I think a lot of credit unions hesitate because there's concerns around, the restrictive contracts and vendor lock-ins and potential long-term cost implications. While the SaaS and cloud model allows for lower upfront costs and pay-as-you-go pricing typically and scalability to be able to adjust as your membership grows. I think some things to consider would be, first, we want to make sure that we're not solely reliant on the vendor on a go forward basis, and that the organization is not choosing a solution that is so tightly coupled that decoupling that solution becomes very difficult. So choosing a modular or API or SaaS driven solution, it's important to ensure that we're not committing to sort of that one monolithic vendor for all banking needs, but we should really consider a modular approach. A lot of the best in class add-ons, like for CRMs and fraud detection and even compliance tool, rather than relying on a single vendor for everything, I would recommend picking a flexible API driven solution that allows for easy swapping. So that way we're not bound to that vendor if per se it doesn't work out. I'd also say it's really important to negotiate flexible exit clauses in shorter term contracts. And this is something that we take a look at as we get into negotiations for into contracts, because we want to be able to avoid the long-term contracts with high exit fees. So generally, we tend to avoid contracts that are longer than 3 to 5 years. We also look for contract transparencies and take a look at any hidden costs for escalations or add-ons that may be required. I think it's also really important to negotiate data portability, so that way we can easily extract data out if we decide to switch vendors. And more importantly, I think with recent times, it's also important to monitor hidden costs, to check for things like API call fees. Some vendors are charging excessive amounts for API requests that are, in very small fine prints, which can make open banking integrations very expensive. So I'd suggest really looking for transparent pricing and ensuring that the price really scales fairly with usage. And also evaluating migration costs up front. So that way we can avoid huge fees when it comes to switching if there is a need to leave. But I'd say overall, smaller credit unions or even mid-sized credit unions can really benefit by using this modular approach and a cloud first SaaS approach, and avoid restrictive contracts by some of the things that we discussed around ensuring flexibility and data portability and transparent pricing. And also, I mean, leverage consortiums and co-ops and coalitions to really reduce SaaS costs and improve on the vendor negotiation power. I think all of those things combined really help credit unions when it comes to choosing the right vendor and the right partner for really moving forward.
Superb. And a last question, as a technology leader with lot of things happening in open finance, in real-time rails, and AI, ML, quantum coming into picture, where does the next 5 years of technology roadmap look like for you as a technology leader?
I'd say, there's a lot, like you mentioned, for consumer driven banking. There's open banking opportunities, which we have to factor in. quantum computing is becoming very much a reality. So, a lot of organizations are in the early ages of even understanding what that really means and how we can prepare for it. Payment modernization is underway. Real time rails is also going to become a reality. So, how do we make sure that our digital banking and our payment rails are all supportive, and that we're, ready from an infrastructure perspective and a support perspective when this becomes a reality? AI is has been gaining a lot of popularity and will continue to do so. So how do we safely integrate that into our environment and really leverage it for all of its benefits while also safeguarding our organization? And I mean, in terms of emerging technologies, I'm sure there will be more, but at the top of my head, I think these are the core areas where we're putting a lot of attention towards.
What technologies are banks buying in the immediate and mid and long term future?
I think, well, it depends on where they are on their journey, but I can speak from our credit union perspective. Um, with our um, with our merger, I mean, we're going through a core transformation. So we're putting a lot of investments into ensuring our new core, which is actually an extension of our existing core at Northern, is future proofed in the sense that we have now full use API and we can integrate with fintechs and open banking. So if that's not already in place with the existing core, I think a lot of investments are going towards modernizing that core and making sure that it is future proofed. I would say, from a digital banking perspective, for those who were with Central One and Forge and the wind down, a lot of organizations then are looking for an alternative provider for digital banking. And again, we want to be in line with, modern offerings and be able to meet member expectations. So that also gives us an opportunity to now transform and be more innovative and pick the right vendor that could suit our needs going forward. I think generally in terms of areas around fraud and cyber, a lot of the larger organizations, even mid-sized, I'd say, are heavily investing into CMs and XDR and spending a lot of time into cybersecurity and starting to view it as a fundamental and not as a cost center. Because if that amount is not invested, it could lead to larger implications if we're hit with a ransomware attack or phishing. So there's a lot of investments going down that stream as well. And of course, there's also investments going towards transformation to make sure we can remain competitive and we are meeting member demands. So I think it's split. And depending on, the journey that the credit union is on, the investments will vary.
Wonderful. Thank you so much, Mary, for this wonderful and enlightening kind of conversation.
Thank you. And a special thank you to you as well for creating a space where we can really share and learn from one another. And I think these conversations are very important for collaborative learning and, in our journey as leaders and innovators. So thank you again. And I do look forward to staying connected.